Welcome into another edition of the Smart Mortgage Show. Glad to have you. We got a good show as we roll into October. We're going to be providing you an update. Rates were supposed to be coming down. Many economists projected that, at least. They haven't, so we'll discuss that, plus what effect it's having on the housing market. Then we'll talk about problem solving during the mortgage lending process, the role Bill and his team at Cross Country plays during this process to help you avoid mistakes, help avoid anything going wrong at the closing table. We'll talk you through that, plus the top mistakes people make with their mortgage. We will wrap up the conversation with that. So it should be a good show today. Stay tuned. Well, glad to have you on another episode. Bill, how are things in your world right now?
Things are good. We are, staying busy. There's a lot of challenges right now in the mortgage lending space as well as the real estate space because there's a lack of inventory and values continue to rise. Rates aren't where they need to be. We've got a lot of great partnerships, so we've stayed busy and we're really grateful for that.
Yeah, I'm looking forward to kind of getting into where we are in October as we move towards the end of the year. I know maybe people are looking ahead to 2024 as hopefully turning the page and being a little bit more positive in terms of the real estate market. But we'll get into all that today. So I appreciate everybody joining us. If you haven't subscribed to our YouTube channel, please do that. If you haven't subscribed to the podcast, please do that as well. And of course, if you want to get in touch with Bill over at Cross Country Mortgage, you can always do so by calling 484-352-4151 or also online, smartmortgageshow.com. And again, the best place to start as you're going through all this, if you're thinking about buying a home, want to get a mortgage, best thing to do is set up a free 15-minute consultation with Bill and Cross Country and just begin having that conversations about what you want, what you expect, and what Bill and his team can offer you. So we got a good show coming up today. Bill, let's kick it off with a little mortgage market update.
It's time for the market update.
As far as the market is concerned, we are seeing interest rates staying higher for longer. And that's actually the language that the Fed has used to describe their Fed stance, their stance on the federal funds rate. And I think this comes out of the job market has not softened, and inflation, although it's come down in a lot of places, still remains stubborn in certain segments. So they've positioned themselves to say, data dependent, we might raise again by the end of the year, but there's also a good chance we don't raise, but we stay higher for longer. And 30-year fixed rate mortgages, due to that stance and statement in the past week, have increased again. So we're, getting closer to, 7.5% on a 30-year fixed.
And I know many economists thought it would be coming down at this point, right? I mean, that was projected. It seemed like we're having a lot of the similar conversations over the last few months, right? It's just kind of holding steady. Yeah, we expect things to come down. We'll kind of keep an eye on it next month. But I don't know that we're necessarily behind where we thought we'd be, but I think maybe some people thought we'd be a little bit lower at this point, right?
I think people thought we would be lower than where we are at this point. Now, if you look at some of the core inflation numbers, they're definitely coming down. There's no question about it. But 30-year fixed rate mortgages often lag behind. So there's sometimes a 6 to 12 month lag. If you look at a chart, I was looking at one the other day that tracked 30-year fixed rate mortgages and inflation came down, and then behind it, lagging, was the 30-year fixed rate mortgage rate. So we might be 6 to 12 months behind that. And that's why when we're talking with customers, we're saying, be prepared to have this payment for 12 to 24 months. If you can hack it, rates are going to come down, but you're going to have to wait out this period of higher rates.
I know nobody wants to really hear that, but it's the reality of it right now. And I know there's a lot of people that are ready to buy and looking to get into the market now. Of course, we've seen inventory low, as you mentioned. So what effect has this had on the market right now?
So that's a great question. The effect it's had on the market is, from a first-time home buyer perspective, when they're making their comparisons, they're comparing against rent. And rents are very high right now. So for them, they still feel like buying a home rather than continuing to pay an inflated rent amount because rents were hit severely by inflation, it still makes a lot of sense for them. So we're dealing with a lot of first-time home buyers. We're also dealing with people that are in that I have to do something. There's enough reasons and they're checking enough boxes in the categories of I need to do something. Whether that's divorce, which pushes people to do things, or even less severe measures. What we're finding is the I want an extra bedroom or a larger kitchen, and it's more of just it's not a need, it's purely a want. Those folks are the ones that are sitting on the sideline. Now, the beauty is those folks have a lot of equity, so when they sell, they're going to roll that equity into the new purchase. The problem is they're going to give most of it back, and then a lot of them are going to go from a 3.5% rate to a 7% rate, so they're going to double their rate. So what we feel like is, and there's a lot of studies to suggest, is doubling your rate doesn't feel so good, and those people who just want to do things are just going to stay put for a bit. But for the individual that is going up 1.5% in interest rate, maybe 2%, they'll make the move. They'll forego their 3.5% rate for 5.5%, 6%, because that makes sense to them mathematically and within their budget.
It's a tough position for a lot of people, and even if you are in that spot where you got to move, and you have to kind of give up all that equity you've earned. I mean, you could be in a worse position, right? I mean, the good thing is that you've been building up that equity the last couple of years, so it does give you a little bit more flexibility. And then hopefully over the next year, we might see these rates come down again, and then of course, as we talk about the refinance options on the table for anyone that gets into a house now. So a lot of things to kind of keep an eye on. What's most important to you these last couple of months here before we close out the year, Bill?
Yeah, what's really important to us, especially in this environment, is you're always combating the news headlines. And your good media outlets, I mean, there's truth to what they're saying, but there's two sides to the coin. And here's an example of that. So right now, if you're straddling that line between wants and needs, okay, and you've got a lot of needs, but you also have some wants, and it's just not clear cut. Those are, a lot of people are in that situation. So what we like to do is kind of break down the math. And one of the things that we look at is a cost of waiting. What does it cost to wait? Because if you're just waiting out the market purely to see more inventory and lower rates, and certain news outlets have the market, values crashing, we don't think that's going to happen. Because even beyond this current moment in time with high rates, when rates come down, there's going to be more inventory, but we're still going to have an inventory shortage because builders did not build for 10 years after the Great Recession. We're going to have a long period of time of low inventory. So when you look at the cost of waiting, what that means is if I wait a year and rates are lower, what am I really saving? So we put that into an analysis, and what you'll see is it helps people to understand that even if they buy now with a higher interest rate, as opposed to waiting for lower rates, values are probably going to continue rising, and there's a cost to that. And nobody can guarantee an outcome, okay? Nobody can absolutely guarantee that the way that we lay it out is absolutely what's going to happen. Hey, if I could do that, Ben, I'd be, we'd be very wealthy, right?
Yeah,
but
exactly.
The point being is this is a very likely outcome, and it's something to consider in your analysis. So when you're talking with us, if you ask us to work up a cost of waiting, and we actually have a video that we send out on it, it's very informative because it levels the playing field with what the media is saying about high rates, high values, and low inventory.
Is that part of the initial consultation? Is that something you can run for someone that is meeting with you for the first time and saying, hey, we're thinking about it, but what is that cost of waiting? What could that look like in a year from now?
Yeah, so what happens, Ben, is on the third step where we present your pre-approval and your loan estimate and go over all the details, that's actually where we would present the cost of waiting. And it opens a lot of eyes. It's something that we found to be very helpful with people making decisions.
you got to weigh everything right in the process and figure out what's best for you. And if you want to begin those conversations, talk about your mortgage options, talk about rates, all those different things, the best place to start is by giving Bill a call, 484-352-4151. You can also log on, smartmortgageshow.com. You'll find all of our videos. You'll find podcasts. You'll find a way to get in touch with Bill, plus some resources, some guides there to help you as well. But again, take advantage of that free 15-minute mortgage and loan consultation. Bill is a regional president of Cross Country Mortgage, and will be happy to sit down with you and walk you through that process. But Bill, we thank you for the update here in October. I know we are all anxiously awaiting a little bit more positive news moving forward. Hopefully November and maybe the holidays will bring that for us, but we'll stay tuned. All right, let's talk now a little bit about our main topic today, Bill. We're talking about problem solving. I don't know that necessarily people think about mortgage lenders as problem solvers necessarily just on the surface, but when you dig into what you do every day with clients, that really is a big part of it, right? Solving the problems that both they have, but also the problems that could come along the way that could make a deal go wrong.
Ben, we think this is a very overlooked part of the process, and we pride ourselves on problem solving. So problem solving starts with us right up front. And we want to make sure that what we're doing is we are addressing any items that could cause your loan to A, maybe not go to settlement. That's a big problem. B, what if we could get you to settlement, but because we didn't look at something, now your interest rate is higher, or you have to pay more in fees. And sometimes you don't close at all because the loan is just not closable. It doesn't meet the guidelines. We settle 10 days late. You could lose your deposit. I mean, there's a whole lot of things that could cause a lot of pain. So what we like to do is we're going to start right up front, asking a lot of questions, digging deeper. Our process of discovery and questionnaire is a lot longer than most other lenders because we're going to dive deep and uncover all issues right from the start.
What are an example to a couple of the questions that might pop up there that somebody might not expect to be on a questionnaire like this?
A couple of the things that we're going to ask from a very basic level is, what's your financial plan? And this one isn't one that causes catastrophic damage from you might not close or you might settle late, but it might cause damage in understanding what your financial goals are. So do you want a 30-year fixed or a 15-year? I can't tell you how many people feel like a 15-year, if you can get into a 15-year and afford it, that you've accomplished some lifelong goal. But if that doesn't match your financial goals, meaning why am I putting more money into the mortgage when I feel confident that I can make a higher percentage in the market? Take the difference between the 15 and the 30-year, put that money in the market, and that money will probably grow quicker than the interest that you'd save on the 15-year. On a more catastrophic level, it's basically looking at all the details, and to dig into one in particular would be income. So looking at the income. So in the beginning of the process, we're going to pull a verification of employment. We're going to spend money right up front looking at tax verifications, verifications of employment, running all the audits. We want to make sure that sometimes people's debt to income ratio, in order to qualify, is very close to the limit. We take that very seriously. We want to make sure that we're super accurate on the income calculation so you're not going to have an issue where you don't qualify for debt ratio purposes.
What are some of the big concerns that people have when they first come in about, things that could go wrong or just the fears they have in the mortgage process? Because it can be overwhelming for people that don't go through it a lot or doing it for the first time. So what are some of the things that are top of mind for them when they come in?
So, Ben, this is the most interesting part, is that because they don't do this often, they don't know what they don't know. And their concerns are driven by outside sources and advertisements, and, some of their biggest concerns are things that really aren't that important unless they know somebody who's had a really bad experience or they've had one themselves. So really what we need to do is try to educate them on the importance of, you're probably going to spend a little bit more time with our team to dot the I's and cross the T's so that we have a high quality, airtight pre-approval that ensures you're not going to have major issues down the road.
We're talking about the problem solving that goes on when you work with Bill, Cross Country Mortgage, and go through that mortgage lending process, and some of the things that could pop up and some of the challenges that could come along. And I'm curious, like, what are maybe some of the common things that will come up that, we talk about making a deal go wrong or potentially blowing up a potential purchase. What are the most common things that come up along the way that actually cause this to happen?
Yeah, so as mentioned, I would say that the debt to income ratio issue with not verifying the income correctly is right at the top of the list. In addition, not reviewing the credit report appropriately, and then maybe not running the whole loan through the desktop underwriter system, because that system is going to look at everything and tell us if we're approved or not. A lot of loan officers don't take the time to do it, and they just kind of eyeball the file and hope that it works. But we can't help somebody with the biggest, largest purchase of their life based on hope. We need to have solid answers and verified, high quality solutions that they can absolutely count on. The other thing would be funds to close. So looking at the funds to close, looking at the bank statements, making sure all the monies that they're going to put into the purchase are coming from allowable, verifiable sources so that we can use all the money. A lot of people don't understand you can't use cash. You can't use money that's not verifiable. That could cause a big problem if a bulk of your money is coming from a source and we can't use it.
If you have questions for Bill as we go through this, 484-352-4151. Is that the biggest thing at the closing table? I know, like, the further you get along, if you get to the very end of the process, things can still go wrong, right? You can still arrive to closing and some things still kind of fall through. Or is funds to close the biggest thing, or is there anything else that can typically pop up at this point?
So there's certainly a lot of different things that could pop up that could cause that. I think the debt ratio, the credit report being looked at appropriately, the funds to close, those three are the big ones. I want to make sure that we highlight those. But there are others, and so one of them is that we do a verification of employment right before settlement. Well, if somebody's quit their job, that could be a major issue. And for us, we do enough educating and we provide enough information and we dig deep enough that, knock on wood, we have never had a loan fall apart at the table. And it is something that happens quite commonly, and we pride ourselves on making sure that never, ever happens.
Yeah, it is something to be very proud of, for sure. And a lot of that's due to the communication that you pride yourself in, right, building those relationships. And I guess that's kind of part of it too, right, is, as you're solving these problems, you're also communicating these things to whoever you're working with, right, kind of identifying them with them, working through them, helping find solutions along the way, but more importantly, just keeping them updated throughout the process, because it's easy to worry about, well, Bill did mention that some things could pop up. I haven't heard from him in a while. Am I in trouble? Like, that's not something to fear working with Cross Country, right? Because you keep everybody in the loop.
Ben, that's a really, really great point, and I'm glad you highlighted it because, constant communication is really important. And we don't want our clients sitting on the other end wondering if they're going to get the loan. So we tell them right up front, we've done all the verifications. We've looked at everything. We're 100% sure that you're going to get the loan. Now, the truth of the matter is it's not exactly fun getting a mortgage. So it can be a little bit annoying at times, and our process is designed to pull as much of that out of the process as possible. But what we want to do is communicate that this is expect this to happen. Set the proper expectations so they know upfront already this is how the process is going to go, and this is all normal, so that you're not over there having a nervous breakdown, wondering if this is all going to work. You're confident because we've, educated and communicated and continue to communicate the whole way through.
Well, as we kind of close out this main topic today on the show, a couple things to remember. Again, if you want to connect with Bill, you can do so online, smartmortgageshow.com. You can also connect with him via the phone, 484-352-4151. But again, take advantage of that opportunity to set up a free 15-minute mortgage loan consultation, kind of go through the beginning steps, talk through some of these things that could be potential issues. Bill will get a better picture of kind of where you stand, and then you can talk about options moving forward from there. If you want to hop on, you can also get the application process started. If you're just, you're ready to go, you're going to be buying a home soon and want to get it started, you can hit the Get Started button on the website, begin that. But also, as we talked about, Cross Country takes a very consultative approach to things. So if that's your speed, of course, that fits very well with what Bill and his team will do. But again, problem solving is a big part of it, Bill, and there are going to be things that pop up, and you want somebody on your team, on your side, that can help work with these proactively, right? That's the most important, is be proactive during this process.
Be proactive, work with a team that has pretty much seen it all before, so they know what questions to ask and what to look out for to smooth out that process and, guarantee you a predictable outcome.
Very good. You can also connect with Bill via Facebook, LinkedIn, Twitter, Instagram, whatever your preferred social media is. You'll find Bill there as well. But again, you can always call 484-352-4151.
It's time for the Mortgage Mailbag.
All right, I got a question we want to end up the show with, Bill. I know we like to do this from most shows, right? Going to open up and talk about a common question that's come up or something recently that was asked of you or your team, and bring it here and discuss it a little bit. And I think there was a good one here that kind of ties in what we talk about on the show today with problem solving and that sort of side of your process. But what are some of the biggest mistakes that people make during the mortgage process?
I would say some of the biggest mistakes that people make have to do with not providing accurate information to their loan officer and to the lender, not asking questions that might be really important and might be very helpful. A good loan officer is going to say, please tell me everything, right? You can tell me anything you want. My goal is to figure out how to get you the best loan program and the outcome that you're looking for. But I think sometimes clients are reluctant to say things out of fear that it's going to result in them getting declined or things like that. And I don't think that's a good way to approach it. It's definitely a two-way conversation, and we want to hear all of your thoughts, all of your ideas. We want to make sure that you're being clear and concise with us about things that might be really important for us to know.
Yeah, this is a good question that comes up because people, you want to make sure you're not making these mistakes, or you can avoid things that are very avoidable. You want to avoid, right? I mean, that's part of it. And with your years of experience, you've seen a lot of different situations along the way, haven't you? So you can kind of get a jump on some things that might go wrong that maybe some people don't see or couldn't see because they haven't done this a lot before.
Yeah. So, and I've been doing this for 21 years, and there's other members of my team that have been doing it for longer. And they're all really dedicated to helping people to buy houses. So our combined experience certainly lends itself to creating an environment where you're going to have like I said, a predictable experience and outcome. One of the things that we see, and so we certainly want people to be as expressive as possible and to over communicate, but we also don't expect it because we're the expert. That's why we ask a ton of questions. And one of the things that we see happening all too often is you're not asking all the right questions. The lender's not asking the right questions. And they're giving you more of a random quote at the start of the process that does not equate to what you're going to get at settlement. Underwriter looks at the loan, the program changes, the rate goes up, the fees go up, but now you're under contract to buy a house. So now the economics of the scenario change and you're kind of locked in. To us, that can never happen. We can't ever let that happen. So I think one of the things that a lot of consumers do is they go out online and they get random quotes and they start to hold on to those as them being actually what they're going to get at the table. And they may be, but they also may not be. Work with a lender that guarantees their terms so you have a guaranteed outcome and you're not just working with some random, maybe even computer-generated quote where the loan officer has very little control.
Yeah, there's very little information that goes into those quotes, so it's hard for that to spit out something that's very accurate most of the time. So something to consider. And I guess when we talk about mistakes, Bill, you're not afraid to have those tough conversations with somebody. If you see a mistake happening or you anticipate something going wrong, you're okay to be blunt and just be direct with that, right?
Yeah, we want to always make sure that we're kind of facing any issues head on and working through them together. Because sometimes things do pop up that are outside of, I've had scenarios where people have, lost their jobs, which nobody could account for that.
Yeah.
And in some of those scenarios, if they didn't get picked up quickly, there was not an option, but mostly we can figure out a way around it. Maybe we talk about a cosigner. Maybe they have another job lined up that might not be their preferred dream job, but it's enough to take it for now, get them through settlement, move their family from house A to house B, and then they continue to look for the better job. But we get the settlement, and that piece of their, it's a huge life event buying that house. We were still able to get through that. So any issues, we can't have issues at the settlement table. We want to get issues out on the table in as far advance as possible.
So you want them on the table and not at the table. That's where you want them.
Exactly.
We should go ahead and just make that the new slogan, Bill.
I love it.
That. But
I love it.
Again, we appreciate your insight. If you have questions for Bill, if you have any specifics that you want to run by Bill to get some thoughts on, you can always leave us a comment, shoot Bill a note. You can connect with him through the website, smartmortgageshow.com, and get in touch with him there as well over Cross Country Mortgage. But the phone number, once again, 484-352-4151. And again, we appreciate you being a part of the show. If you haven't subscribed wherever you listen, whether it be on podcast or on YouTube as well, we'd appreciate you hitting subscribe if you haven't already. But we appreciate your support, and we appreciate you listening to this episode. Bill, thanks for your time as always, and we'll catch up again next month.
Ben, thank you so much. And as Ben had mentioned, anybody has any questions, wants to reach out, we're always happy to hear from you. Please reach out. Thanks so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.